Hi there, welcome to Kneppy Invest. Now, the other day, just as the market opened, I went to have a little peek at how my portfolio was performing, and I noticed two companies, their share price were down between about 5 and 8% for the day, and that happened right on open. So, immediately, my first thoughts were potentially they had released some bad news to the market, so I looked at the announcements and they hadn't. And then the second thing that popped into my mind was perhaps they went ex-dividend. So I had a look and indeed they had. So as soon as I saw that, I put all my fears aside and just enjoyed the rest of the day. So what does it mean when a company goes ex-dividend and why is it important? So what is the ex-dividend date and why is it important? So trying to understand these concepts, you have to understand that it's very important to know who is entitled to a company's dividends. So there must be some sort of rules around this. And the main rule to determining who is entitled to a company's dividends revolves around the ex-dividend date. So if you do want the dividends of a company, you have to be holding the shares of that company the day before at close, the day before it goes ex-dividend. If you buy the day it goes ex-dividend, you are not entitled to the company's dividends. So that's why it's very important, particularly to those investors who chase dividends. And there's quite a few of them out there because they're highly dependent on the income stream of dividends to fund their everyday life. Personally, I'm not that interested in dividends, but I still have a bit of an interest in when a company goes ex-dividend because, as I'll show you later in this video, it can add a bit to your returns. So now we know that going ex-dividend or the ex-dividend date is of high importance. So how do you find this sort of information? Luckily on the ASX, they do make it quite easy typically. And all you have to do is go to the half yearly or yearly results where the date where the company has released that information. And here I've got CSL's list of announcements when they release their half yearly results on the 18th of February. And CSL released about 4 or 5 announcements that day. And one of those announcements was the dividend and distribution details. And in those details, if you click on that announcement, they'll give you the dividend amount and they'll give you 3 dates: the ex-dividend date, which they call X date here, the record date, and the payment date. Now, the payment date's fairly obvious. That's the day you get paid the dividends. The ex-dividend date, or the X date here, is if you want the dividends, you need to be the shareholder at close on the day before that date, so March the 3rd. And the record date is simply because of the systems they have on the ASX. So if you buy CSL shares on March 3rd, it takes 2 days for your details to be registered with CSL. That's why T+2 takes 2 days to be recorded. So from the 3rd, 2 days is the 5th. So that's why they've got the record date. You don't really have to worry about that. It's just because of the ASX systems. Now, it's actually really easy to find any sort of ex-dividend or the ex-dividend date for any company you do own or you want to own because any reputable broker will have this information on their platform. So I do use CommSec and mostly Self-Wealth, and it was very easy to find this information on their platforms. In the CommSec situation, all I did was go to their dividend section for CSL, and they've got all the information on the dividends. They've got the dividend amount, dividend yield, ex-dividend date, and pay date. You'll notice they don't have the record date, and again, that's not very important for an investor. In the Self-Wealth instance, it was actually easier to find because it was actually in the CSL overview on the front page. So all I had to do was click on CSL, put the CSL ticker code, click on it, and it's right there staring you in the face, all the information about CSL, the per share, and it's got dividend X date down the bottom with the dividend pay date. So very easy to find this sort of information on any broking platform. Now, I'm pretty certain there have been some people in the past who have thought they've been very clever that they can go dividend chasing through a strategy. And the strategy is you buy a company's shares the day before it goes ex-dividend, which means you're entitled to that company's shares, and then you sell the day later, the day it goes ex-dividend, and then you just rinse and repeat this every single day. So you got all this dividend come flushing into your account. But there is a fatal flaw behind that sort of strategy. And the fatal flaw is, all else being equal, the share price of a company should fall by the dividend amount on the day the company goes ex-dividend. For example, if you have a company's share price, say it's like $3, and they announce a 50-cent dividend, the share price of that company should fall from $3 to $2.50 the day it goes ex-dividend, because the way you look at that 50 cents is that 50 cents or that value is leaving the company. So the company is actually less valued the day it goes ex-dividend. Now, does this share price effect of a company going ex-dividend, does this actually happen in real life? And it does, absolutely. So I have two examples here of companies that I do have in my portfolio that went ex-dividend on the 12th of March 2021. Now, on this day, the XGO went up 0.8%. So the all else being equal actually did quite apply here, because you would expect in these sort of days when the overall market goes up that the share price drop of a company that goes ex-dividend won't be quite as much as the dividend that it has given its shareholders. So the day before dusk went ex-dividend, the share price was $2.98. So you would expect with a dividend of 15 cents, the share price should be down around to $2.83 to $2.85, that sort of range. It actually opened at $2.85 and the low of the day was $2.84 before it closed at $2.90. So even though it had a 15-cent dividend, the share price only closed down 8 cents. So the way I looked at this as a shareholder, it thus gave me a dividend yield of 5.2%, but the share price drop was only 2.7% drop. So the overall gain for the day with dusk was 2.5%. And the second example I'll give you is Base Resources. This is a smaller mining company, but they did announce a 3-cent dividend to the shareholders for those who are holding it at close on the 11th of March. So the share price finished on the 11th of March at 32 cents. So you would expect with a dividend of 3 cents, the share price should open around the 29 cents mark. Did it? Well, yes, absolutely it did. It opened at 29 cents, which was down about 9% at open. And when I saw that, I did become a little bit concerned until I saw it went ex-dividend. But during the day, because the overall market was up, there was a bit of a rally in the share price for Base Resources and went from 29 cents to 30.5 cents. So even though the dividend yield was 9%, the share price drop was only 4.7%. So the overall gain for me was 4.3% for the day with this company. Now, this sort of thing happened a lot to one of my portfolios one week, and I call this week the ex-dividend week because 6 of the companies I hold in this portfolio went ex-dividend and actually did affect the capital gains of this portfolio during this week. And if you compare the capital gains compared to the benchmark, the ASX 200, I was negative. So I was down 0.4% in capital gains compared to the benchmark, which was up 0.9%. But if I take into account the dividends for the week, I was actually up 1.1% for the week compared to the benchmark 0.9. So it's very important to understand that your capital gains can be affected if a lot of companies you have or hold go ex-dividend, but you have to take into account the dividends you do receive holding those companies. So that's all for this video. What is the ex-dividend date and why is it important? Now, if you did need some clarity around some of these issues or these concepts, hopefully this video has helped you. If not, leave a comment in the comment section and maybe I could clarify anything that is still unclear to you. Now, I'm not a financial advisor, and if you do need financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.